Welcome to this episode number 84 of your next trade called today Tulips Growing. So many things to discuss today, from the move in the euro dollar to the micro strategy craziness. But I would like to start with a chart that is pretty interesting here, explaining how those tulips are growing everywhere. So I give you here a chart about, the performance since the early August, which was the lows of the stock market with the S&P. At S&P in white versus the high short interest in orange. And as we can see here, we have seen over the last few weeks, more or less since the election and the results of the election, a big move in high short interest, which have been outperforming the S&P by 25%. So we are seeing a lot of high expectation in the market and some craziness with, if you look at those shorts names, and it's not very hard to find them. If you look at the short interest, you will see that those names are going parabolic. And that tells you that there is a strong appetite from mostly the retail market into those names that are outperforming. And you can say the same with the momentum stocks over the last 18 months. So in terms of valuation, I don't want to be boring, and some people will say if you're not into it, you're probably a bit bitter. That's not the point. The point is more or less that if you play those highly push names, you are at one stage looking for trouble. And it's not that different from 2000. That's not very different from 2021. I'm just telling you what I've been seeing. So let's start with a good news. As always, around Christmas and the Thanksgiving, what I do a 25% holiday discount on the 4x4 video series. So if you want to subscribe to a professional process that I've been building over the years, feel free to do so. The coupon code is holiday25. It will be running until the December the 31st, 2024. So this is for the product. This is for the 4x4 video series, where you're going to be learning a professional process through macro, through special situations, through generating different trades. And those trades, you're going to be looking at quantitative analysis, qualitative analysis, technical analysis, risk management, and how to build your trade. So let's go back into the week-to-date asset performance and how the stocks have been doing. So 1.7% for both the NASDAQ and the S&P 500. And what I want to underline this week is pretty much, we are going into flows and we are going into passive investment. So pretty much the market has been very mechanical for the whole week, as we're going to be looking at the charts later. We see a lot of inflows, and as we underlined last week as well, what is pretty much true is the seasonality going into the next 6 weeks, going into the end of the year, is pretty good for the S&P, for the stock market, and this is what we have been experiencing for stocks. We are going still parabolic with the cryptos, 99,000 for the for Bitcoin, so pretty much very close to the 100,000 that we raised 2 or 3 weeks ago. We saw as well gold bouncing back after some weakness after the election, and WTI trading now above the 70 level. If you look as well on the dollar has been pretty strong on the week, up almost 1%, and we're going to see later, we're going to be talking about the euro dollar. What about the week-to-date industry performance? So that is an interesting chart, because if you look at the S&P here and if you look at the NASDAQ, as you can see, you get many winners. So we saw a lot of industries outperforming the overall market. The reason is pretty obvious or not. So we saw big names like Google, like Nvidia, actually flattish on the week, but overall the market is extending from this fabulous 7 into more names. So we see the market expanding into new sectors and industry, and this is why we had overall a very strong market with the S&P up 1.7%. As I said, materials 3.1%. So this is interesting if you are looking at anything that is cyclical. Actually, the cyclicals, industrials, materials have been outperforming the market for the week. So very strong market overall. And if you go now into the rates world, we are at 442 on the US 10-year. So pretty much the same level. We have been trading between 430 and 450 on the US 10-year. So big move from September onwards, where we are expecting now the Fed to be less accommodative. The reason is two fears, or no fears. That should be inflation. That should be pretty good going forward. You know, we are talking 2.5 to 3% for the next 2 quarters. Those are the expectations. And as well, a bit of inflation picking up. So that means the Fed, if you look at the Fed fund rates, doesn't have to be as hawkish, meaning cutting rates as quickly as we were expecting not so long ago. So December meeting, there is still a chance that they're going to be doing 25 bips, and that will make sense in terms of what they have been saying. But, you know, I think it's a 50-50 now for December for a cut. And going forward, as we can see, the last week, which is this line, has been moving up versus the what we had a month ago. The reason, again, is higher inflation and higher growth. What about the VIX? So VIX, we are around 16-17%. For the 30 days implied volatility on the S&P. If you look at the 9 days, it is much lower. We are talking 14%. So it doesn't feel like the market is trading at 16-17% implied vol. We are going into a more quiet period in terms of volumes, as we do have this week Thanksgiving, meaning the market is going to be closed on Thursday. So I want to be moving into the charts and starting as always with the S&P. So the trend is your friend. It's still the same story. We are trending higher. Really a very strong trend. If you look at the bottom, the volume are still significant, as we've seen since the start of November. So always put your price action obviously versus the volume, and as we can see here, we get some participation, a lot of inflows through ETFs and some names that explain the move higher. If we look at the Nasdaq, this is the same story where we are trending higher. If you look now into what I would like to underline is the euro dollar. So that was when it was trading at 107, we said, you know, there's a risk it can go to 105. On Friday, we saw really a big fall. It went to 103.31, something 35. So that was on Friday. And as you can see, this is a bit of dodgy technical analysis. But if you check actually the chart that I was doing last weekend and the week before, I was putting this 103.5. So why the euro is so weak? Because the European region is very weak. We had the flash PMIs on Friday, and both Germany, France, and the overall Europe PMI, flash PMIs was 2 points below expectations. So the weakness of Europe is carrying on, and that explains some, obviously, of the strength of the US dollar. But stay with me for another 5 minutes, and there's going to be a very interesting chart about the euro dollar. Bitcoin, as I said, you know, the parabolic move is still pretty much on. We are getting very close to the 100. So get ready for taking out your $100,000 because you're still trading against the dollar. Your $100,000 hat for the Bitcoin. Sorry, Nvidia, really funny move after the earnings. So we had a big move that was on Thursday because we had the earnings Wednesday after the close. We went to 152 above intraday. So pre-market, the stock was trading below 145. Then very early in the session, we went up and then we came back to and closed. So not much of a move in terms of week on week. What has been interesting is the numbers have been pretty good. If you look at, I think there was someone that put that tweet saying actually the net income of this quarter was higher than the net income the revenues of the previous quarter. So very, very strong number. And finally, I want to end up with the S&P equal weighted versus the S&P, the normal S&P, which is mostly driven by those 7 or 30 names if we are looking at the FANG. And as you can see, most recently, actually, the S&P equal weighted has been doing pretty well. And for this week, due to Google that was very weak over the last 5 sessions due to the probably spin-off of the Chrome business, we saw some outperformance of the equal weighted. So something that we flagged that we want to be looking at over the next few weeks. So let's go back into the what happened for the week. So we flagged last weekend that was about Nvidia and the flash PMI. Nvidia, obviously everyone was looking at it. For the flash PMIs, that was on Friday, and we had the big move on the euro dollar. So that would be for this chart here, and I want to explain a bit of how currencies are working, because this is mostly, you can be talking a lot, but this is mostly about the differential in rates. Okay, we saw that with the dollar yen, with the Japanese 10 years way below the US, which was explaining the weakness of the Japanese yen. You can do the same chart. You don't need to pretend to be super smart. You just do like I did. So on the left hand side, what do we have? We got the US 2 years. Okay, the US 2 years, meaning the bond that is yielding for the next 2 years versus the European 2 years. And here I'm using the German one. So that means the differential here, this is on the left-hand side, is roughly around 2 point, if I look here, so that will be your white one, 2.36%. Okay, so that's on your left-hand side. If you look at the right-hand side, what you have is the euro-dollar inverted. And as you can see, this is not magic. The charts are the lines are following pretty much one to each other. In other words, as long as we do have the yields in the US that are so high versus Europe, and what has been happening on Thursday and Friday and over the last few weeks is actually yields in the US have been going up due to expectations of higher inflation, higher growth, and in the meantime, in Europe, market is expecting to the ECB, the European Central Bank, to be less accommodative. Why? Because the economies are not that strong and inflation is coming down. So as you can see, this is pretty much telling you have a strong correlation between the two. So what I suggest for you to do is, or if you want, or you don't have to, but if you're trading FX, you'll be doing the same. So this is the carry trade, more or less. You'll be putting, the two versus one country and another, and versus your currency. And as you can see, most of the time there is a strong correlation. Let's go back into stocks. So looking here at the S&P futures over the last 5 sessions, and as you can see, we go slowly up with a bit of intraday moves from time to time. We are moving 20, 30 points when the options need to adjust. But more or less, this is very mechanical. This is very inflows. This is passive investment from one week to another. And we decide to be putting outflows every single day, and the inflows. So in every single day, the market is slowly but surely going up. And this one, very interesting chart. So it is coming from Eric Balchunas, and giving him a follow if he needs any more followers on Twitter. But very interesting chart about the weekly inflows on Monster, on MicroStrategy, where the ticker is MSTR, which is the second derivative of Bitcoin, and is trading these days at 3 to 4 times NAV. But here you see the weekly inflows in the name. We are talking 136 billion. So for anyone who thought that at one stage there has been a bit of craziness, if you remember GME, so that was in 2021, where the short squeeze in options, that tells you a lot about, this market these days. Options, Bitcoin, short interest. So we are talking the mother of all short squeeze. If I remember one of my Italian colleague, when the market was moving by more than 5 points, he was, yelling and shouting in the trading room, Greg, this is the short squeeze of all time. And this is, what is happening in some names. So every single week we have different names. Last weekend we discussed about Palantir. This week this is MicroStrategy. And as I've been saying over the last 2 to 3 years, you need to be building some watch list around. Not watch leaks, sorry, some monitoring of options and what are the options that are trading the most, because that is driving the flow. So what about the catalyst going forward? We are going into a quiet week because we're going to have Thanksgiving on Thursday in the US, meaning the stock market is closed. We had alpha session on Friday, but most of the time, the alpha session is very quiet, and Americans will be traveling from Wednesday to Monday morning and taking some good time with their family. So overall, much quieter market. How the S&P has been trading recently on Thanksgiving week, and here I give you since 2001. Overall, the market is up 0.8 to 0.9%, so roughly 1% for the week. The only one that I remember that was a bit painful for the market was 2021 recently, but overall, we're doing pretty good from Friday close to the Wednesday close, meaning for the first 3 sessions of the week. And as you can see here, this is the chart, this is the seasonality going forward. So this is, we are roughly 23rd, 25th of November. The market is trading higher until the end of the year. What is true as well is when the market has been very strong, like it has been, the market into the next few weeks is not as strong as what it used to be usually. But overall, if you look, I think I read this data that from the start of November to the end of December, the market on average is up 4 to 5% for the S&P. So we are following the seasonal pattern. I strongly advise you as well to look at the OPEX for December, so the option expiry for December, and there is a huge opening for the December of 6.15 on the SPY. So that will give you another 3 to 4% for the S&P. Market, again, is very much driven by those options, and we could have the confirmation. What about the weekly straddle, the move 1%, which is much lower than any recent weeks? Why? Because the market is closed, obviously. In terms of macro, we get the GDP, we get the PCE on Wednesday, we get some regional PMIs. We are talking Chicago Fed, Dallas Fed, PMIs from Philadelphia, and we got some house prices as well, so, and the conference board. In terms of earnings are, most of them, for me, the most interesting ones will be on Tuesday. So we got Dell, we got Crowd, we got HP. So that would be for some names for the artificial intelligence, especially Dell. We got as well the FOMC meeting minutes. And as always, at the end of the month, we have some bond supply coming into the market. So we are talking more than 100 billion, and that explains very often why at the end of the month the yields on the 2 to 10 are higher than usual, because to swallow this new supply, the market needs to have higher yields. So let's say this is half a week. We do have some earnings and a bit of macro. So overall, this is it for me for this week. If you want to have more information on the 4x4 video series and or the mentoring, so 4x4, as I said, we have a 25% discount until the end of the year. If you want to subscribe to the YouTube channel, feel free to do so. If you want to join the trading community, we have 1 free channels, and we have like 25 channels for people who subscribe to the 4x4 and or the mentoring. And if you get questions, as always, I'm there for you at greg@duponttrading.com. So for those in the US, enjoy Thanksgivings, enjoy the time with your family, and for the others, and for all of us, I give you a good trading week. Bye-bye.